Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
Rupee and volatility are two words that did not go well together up until a few months back, but things have changed more recently with the currency exhibiting larger set of moves. Initially on fears of reciprocal tariffs, the USD-INR pair hit a new high of 87.93, which was followed by strong intervention which brought it down to the low 87.40s. Yesterday, another round of intervention and stop losses getting triggered brought the pair below 87 to as low as 86.50. Good morning, JK. I'm sure our listeners want to know what to expect from the rupee going forward.
Hey, good morning, Swaraj. Yes, definitely we have seen unprecedented two-way volatility in the USDINR in the last three trading sessions, I would say. Uh, See, from the budget day low of 87.33, we saw a move to 87.95 on Monday. Of course, that came on the back of tariff news over the weekend. And most of the move happened with a gap up. And once we were closer to 88, I think we saw the central bank step in and sell intermittently and bring down the rate to somewhat of a reasonable level, closer to where it was at on Friday's level, closing. And this would have been seen as a normal operation, and market was not perturbed. But what happened yesterday was something that unprecedented, because market right from the open, the PSU banks were seen selling at successively lower levels and taking the market lower by as much as 1%. And if you look at the rate at which it was trading, on Monday morning, we are already down by about 1.5% on the USDINR. Now, several theories are there. One is the amount of selling could be as high as $10 billion. I mean, this is significant considering that the RBI's reserves are also heavily down. Secondly, this would have been prompted by huge speculative long positions that have been built in the market, which probably RBI is well aware. And the moves, particularly the latest up to 87.95, was probably not backed by real flows because the move itself happened on gap up basis. And third factor is the aluminum and steel tariff, which Trump administration imposed, was not going to impact the the Indian economy as much. Then we also had the exporters holding back for quite some time, and market, they probably wanted to have a two-way market where both importers and exporters are actively using the levels to hedge and not become a one-sided market. This could have been the thinking that RBI has been harboring behind their latest intervention on on the market. But whether this will continue, whether it will continue to see the rupee strengthen, I have every doubt, because first of all, there are no change in the factors that have been, or rather the conditions that have been responsible for rupee to weaken. Neither the RER has corrected a lot. Flows have been still negative. Yesterday also we had seen FI flow to the extent of almost 500 million outflow. Stock markets continue to feel the selling pressure. The dollar index itself has been around 108, and it is closer to the highs of the cycle. Neither the Chinese yuan nor the yen have built on their slight gains that we have seen in the recent times, but again we have seen fresh weakness, particularly in the yen and other Asian currencies as well. And the threat of tariffs on India as a as a part of the reciprocal tariff that Trump has proposed is still hanging over. So we do not see. And finally, I would say that any further strength in the rupee also is not justified, because we are supposed to be helping the export sector, which has not done so well in the last 1 year. So all these factors, according to me, point to a base somewhere near 86.50, not much below that, and we should be seeing a gradual uptick in the USDINR. But of course, this time the market would be cautious. What RBI has ensured is that The speculative longs will not be in play much, at least for some more time. And it will if it is driven by actual outflow or import hedging, I don't think RBI will come and intervene once again. So that's my view, and I think importers should be using these hedges to, sorry, these dips to hedge at least the near-term payables. And on the global market, as I said, the dollar index itself has somewhat found it difficult to go higher, but not really made any dent on the lower side as well. Euro has found a base at 1.03. Some short covering is seen, but again, like India, Euro also awaits final call on the tariff to be imposed by the Trump administration. They have not yet spoken about the Eurozone, what they would be doing with, and similarly with Japan as well. And so the tariff talks have not gone away, and they will eventually be in play, although there is some lull in that so far. Now, market also shifted its focus to what Powell was going to say on the economy when he testified to the Congress yesterday, and there was not much of a surprise, and in fact he has indicated that the policy is less restrictive than it has been and for long, and then they are not in a hurry to adjust the policy rate. Economy is strong, and employment situation is good. Inflation is steadily progressing towards objective of Fed, etc. So, and also specifically speaking about tariff, it really does remain to be seen what tariff policies would be implemented. Would be unwise to speculate when we really don't know. And of course, there will be implications from tariffs, immigration, fiscal policy, and regulatory policy. So, Fed is also on the watch of what's likely to come as a policy measure from the new government, and accordingly they will adjust. They will respond on the policy side. So there is this almost the same what we heard from Powell after the Fed meeting, the previous Fed meeting. So there was no surprise there. We'll of course look for one more testimony today, second part of the testimony. Normally there are no major surprises, but there can be some new points raised in the Q&A, which we'll look out for. Now moving away from Powell and the tariff news, we have key data from US and India today. CPI from US is expected today. 0.3% gain is seen in headline as well as the core inflation, and most of the Fed speakers recently have expressed that the inflation development and the future inflation expectations based on the policies of the new government will keep them on hold for some time. And market discounting also shows that not more than 0.25% increase in the year is expected. Although there is a view that housing price-led inflation is going to steadily come down. So there will be, of course, one factor that we will watch out for every year. There is historically seen that companies do reset their prices higher in the beginning of the year. So which means January prices could be higher than what was seen in December. So the extent to which their pricing power influences the CPI is something that we will look out for, and that can be actually a big factor that influence the Fed policy going forward. In India, there's a good moderation expected on the CPI from close to 5.5% to 4.6% in January. I mean, RBI has already acted by reducing 0.25% in the policy rate. And if we do see a consistent moderation in inflation, I won't rule out another action when they meet on April 9th. But yes, core inflation is also something that RBI has pointed to as one of their factors. So core inflation is this month slightly expected to tick up, but then it will be well below 4%. That's not a matter of concern. Industrial production in India is expected to reduce to 3.9% from 5.3%. So apart from these, traders expect only if there are any fresh tariff news from the US, of course. People are expecting the reciprocal tariffs to take effect immediately, while the tariff on aluminum and steel are expected to be implemented a month from now. Also, focus is on the Russia-Ukraine peace talks, where the Vice President Vance is already in Ukraine, and there are some indications that Zelensky, the Ukraine Prime Minister, is ready to make some concessions to get peace settlement. So that's a good development if we do see some, but I think it may be some time before we finally see those things. So markets are now in the more leaning towards fresh economic news with an eye on what Trump says. And as far as the USDINR is concerned, looking for volatility to reduce in the coming days and more flow-driven market to be seen. And I'm slightly biased to the buying side near 86.50. Thank you.
Thank you, JK. And for USDNR, as you said, more inclined towards buying side, towards 86.50. Globally, the factors have not changed. The factors which affect rupee, at least, the flows for India remain negative. We are seeing consistent FII outflows continue with the strong dollar index. So as JK mentioned, even in his commentary, a base around 86.50 can be expected. Globally, even euro has found some support around 1.03, but largely these major currencies are awaiting updates on tariffs, which are keeping the moves strictly range bound. When it comes to Powell's testimony, it was not much of a surprise, indicated that policy is less restrictive, economy is strong, inflation is progressing towards objective. So essentially, no need of a sharp rate cut, and it can be approached gradually. And the key data today would be CPI from the US. The expectation is of a number slightly higher, and CPI from India, moderation is expected from around 5.5% to 4.6% in January. That's it from us today. Thank you for listening. We will catch up with you tomorrow for the fresh round of updates from the markets.